Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, November 16, 2018. Stocks could be bottoming, although retest of October 2018 is quite likely still, so we need to be ready and willing to quickly let go of our losing positions and just sit in cash and do nothing. Or if you're very aggressive, you could potentially start shorting if you know what you're doing. We'll look at some of the interesting price action: Facebook, Nvidia at fresh lows, Verizon at fresh highs. Again, interest rates are still around the 5-year highs, so that's something to be cognizant about. Junk debt at 52-week lows. Correlation between junk debt and stock funds are very high, so we need also to be thinking about quickly exiting any and all positions that we feel that could be losing, and additionally the ones that are profitable but target has been hit and you just want to take your money and sit in cash. Foreign markets, there's a feeble bounce happening right now. Dollar could be in for a bit of a rally. I think we may see a pullback from the highs, and then we'll basically bottom. I think the rally right this instant may be over, but I think the rally will resume. I don't see a bearish turnaround for the dollar yet, basically. Gold miners, of course, are experiencing rally as the dollar is pulling back away from the highs, and natural gas over 54% after recent alert. Now, if you trade futures, you will realize that because of the nature of the leveraged nature of futures market, this gain translates into a very large gain, obviously, in the natural gas futures market. Oil also collapsed over 12% following our alert to go short. So we went ahead and sent an alert out, and hopefully subscribers followed and made very nice gains, especially natural gas. And we'll look for bottom in cryptos, which I think is to be postponed. Okay, so we'll begin today a little bit unusually. It's a 4-hour chart. This is a 4-hour time frame. You can see that on the 4-hour time frame you can see resistance that happens to be marked by this blue line, which was then at 28.18. This occurred on November 7th 2018, right there. This is a 4-hour chart, so you can see that the price acted in a certain way, because we're looking at price action, right? So we simply need to know, we need to simply learn how to read price action. And the way I'm reading this price action, if I knew nothing about the security, about this instrument, is that I see price broke out here above this red line, continued to this blue line, and then was rejected there. Now, to find out more about the lines on the chart, this green, parallel, blue, red, and yellow line, then head over to MasterChartsTrading.com. Click on Alerts and Indicators, and then you can find out more about them. The indicators is what I'm referring to here. These are my indicators, and they are available for you if you have a TradingView account, which is free. So here on 4-hour chart, you can see the price came up to this level at 28.18. You can see it right there on the right, and then was rejected. So you can see that the price actually did a nice drop afterwards. So if you are trading futures, you can see that this is a sizable drop, about 3% for futures. This is a large, how many points is this? 347 points, right? No, how many? I'm sorry, 86 points, almost 87-point drop. So it's a pretty nice gain there. So if you're trading futures, then you will appreciate the size of this gain. So you can see that now it continued lower, and when I trade on intraday, which does occasionally occur, I set my price fluctuations as bearish versus bullish, the blue and the red line. So on the intraday chart, so let's say this is a 4-hour chart, this blue line, I would say, okay, this is a breakout above this line would mean that I'm going to be buying. I'll be thinking about buying. But a breakdown below this red line, and I would be thinking about selling. And here, I mean, if I was trading, I would probably just short it right there. On this bar right there. Now, I wasn't trading it back then, so this is for educational purposes, right? So, and you can see that this trade would have been successful. Now, here we are basically on the 4-hour charts. Right this instant, if I was trading it, I would still be thinking about selling it. So, for example, right there on this candle, which occurred on 15th of November at 1800, 6 p.m. With a stop above 28.18. And, you know, I think right now the trend on the 4-hour chart is down. So this is the resistance I was referring to. And here we are on the daily charts now, and I usually look at it from the daily perspective because intraday charts, they are much more there are many more fluctuations and they're not as reliable. I think the daily charts are much more reliable than the intraday charts. Plus you have more time to make a decision. So this price action looks hopeful because see, notice how the way it bottomed around this red indicator line right there, 26.87. This indicator lines, again, they are calculated. They are not just drawn by me there. This is an actual indicator. It's a plugin, and you can look up the indicator right there on TradingView. Just click over it and then find me as Master Charts Trading. Right there, there's two of them. See how there is a lock next to them? That means I need to allow access to those indicators. So once you have signed up on my site, you can then get access. So on this price action chart, you can see that the price has bottomed around the red line and rallied. So to me, this is a hopeful sign. I would probably continue buying. I mean, I haven't stopped buying in the sense of I haven't closed my long positions or bets for the security of going higher. Not yet. But if we see a continued pressure, and especially if we close below 25.99, that could be game over for the entire bull market in stocks. So we'll see. I mean, the 25.99 level is not that far off, and I'm referring to this October low and basically a line slightly below it. So those again are my proprietary indicators. But the point of I'm trying to make here is that this chart, even though it looks hopeful because of this possible bottoming action here on the 13th and 14th of November, there is a significant possibility of retesting the October lows, and that retest could be unsuccessful. You see, I mean, we may just try to bottom, and then boom, we break down, and then that breakdown could be just literally within a day's action, we could collapse from there. So, in a sense, stocks are precarious, and I keep referring to correlations between world stocks and United States stocks, and these correlations are high, so maybe we'll go to world stocks first, and then we will look at some of the price action in the other sectors. Alright, so let's look at price action in other world stock markets, notably, of course, Europe as the biggest still. So here is VGK, European markets. Well, it's a very big market. European markets, European equities. This is a bearish chart. I don't see it any other way, basically. And if I knew again nothing and I would only look at this chart, I would say that I would want to sell it. I want to short it. I want to short it here at the red line at currently 50, what is it? $5 or so. So I would want to sell it there. And you can see that I am relatively conservative. I want to see a big bounce before I sell it, before I short it. But you can see here that we had aggressive shorts. It didn't even reach the red line. It was a relatively feeble bounce and then selling. Here's one really strong selling here on October 4th. Like if I was aggressive, I would short it right there. Or on September 5th. But again, I will put my stop well above my entry around the blue line. So there you will need to have a significant leeway. But this is a bearish chart again, so we need to think about selling it, or at the very least not buying it yet. I'm okay with buying it around 58, 55. But for now, I'm seeing it as a continuation of a downtrend. Japan, EWG, basically the same thing. Here's the avoid. Avoid happened on October 10, 2018. And from then on, I told my subscribers that I wouldn't touch it, basically. Until I see a rally around to above the blue line, to around $60. Currently we're trading near the lows, so that's EWG, Japan. Then there is emerging markets, the totality of emerging markets. And here the aggressive shorts just had a field day for the past, since July of this year, basically. The bounces were so feeble we couldn't even get to the red line. So I think this time is different and we might actually get to the red line. I would still consider selling it. I don't see this turnaround. Again, for me to become interested in this ETF, I would need to see a rally above 46. So we basically have the entire world in a bear market and the United States in a middle of a possible bounce. And this bounce is not exactly decisive yet. I'm still sensing we can get down and test this lows here. So yeah, I would still be very cautious about entering new positions, and just be kind of on the lookout for a swift turnaround. So some of the notable price action I wanted to share, of course, are Facebook and Nvidia. So let's look at those two. And since I live in Silicon Valley, I actually have some friends that work at Facebook and some friends that work at Google too. And I'm seeing this price action and I wonder, if perhaps layoffs are coming. So Facebook, all-time high just a few months ago here on July 24th, 2018. then an enormous gap down, and this was apparently the biggest market capitalization drop in the history of the markets worldwide, if I'm not mistaken. At that point, I told my subscribers to be cautious of Facebook. There's an understatement. So hopefully your portfolio wasn't terribly heavy in Facebook, and you should always consider diversifying portfolio where drops of such magnitude don't wipe you out. So I wasn't trading personally Facebook back then, but to me this is not a good sign. So caution. In other words, to me, I would be thinking about selling, or at the very least not opening any new positions to go higher, the bullish bets. And notice the price action continued to deteriorate, and here on 18th of September I see a close below my yellow indicator lines, and again you can find out more about this at MasterCharts Trading. And this is it. To me, this is it. This is no longer an acceptable behavior, and this behavior is definitely not bullish. It is behavior of a bearish security. So here I'm sending alerts to avoid it. Notice what happened afterwards. I sent another alert actually on October 2nd, and notice it just collapsed afterwards quite a bit, and it's trading at fresh lows now. So important, this is a big company, it's an enormous part of S&P 500 and of QQQ, of the Nasdaq 100 ETF. Let's look at Nvidia. So Nvidia reported positive results, beat the results by 15%, and then promptly collapsed 18% from the day before. So you go figure that the fundamental analysts, I'm sure, are scratching their heads right now. I am not scratching my head. I wasn't trading again Nvidia back at all. This is again, it's a notable price action, but I can show you on this chart that, let's say back in October of 2018, this year, I had no positions, and my friends were talking to me about buying this security, buying this instrument. And I would be like, okay, cool, let me look at it. So I'm looking at it and I'm saying, yeah, it's definitely bullish. I definitely want to be buying it. So my friends are correct. Now, what my next question is to you is that where would you be buying it? And since I look at the price action, I'm looking at my indicator lines, I'm looking at green, blue line, and I would want to be buying it around the blue line, which back in October of this year was at 250 bucks or so. Then we advance a few days more, and there's my opportunity. Now notice that the close occurred on this date. This was October 10, 2018. A close occurred below the blue line, and I was interested in buying it. I had no orders out, but I would have been interested in purchasing this security. So now I see this close, and this close is, the low is next to the end of the session. In fact, it is the end of the session. So in other words, selling continued all the way into the close and never stopped. So this is not a good sign. If we had some other price action, which I can explain later, then I would have been more interested. But here I'm looking at it and I'm like, I'm not so sure about this. So then next day we can see a breakdown further, and my trigger is really simple. I want to buy on close above the blue line. That's my trigger. I don't want to do anything else. Okay, so now the price action is showing a more interesting candle. You can see it's sort of like a hammer candlestick. But the next day price again went lower, so my trigger was not triggered. I want to see a close above the blue line. Was there a close above the blue line? No. So we continued doing nothing. Again, the price kind of came close, but no cigar. Next day, nothing. And then another low. So here I'm just sitting and doing absolutely nothing because I'm not so sure about the security anymore. And I'm sure my friends who were telling me to buy Nvidia are, probably have bought it when it was like 50 bucks. But right this instant, the price action is not confirming a bullish hypothesis. Notice that a few days later, on 23rd of October 2018, the price dropped even lower below the red indicator line. So this is an outright caution to me, and if I was trading it at MasterCharts Trading, I would have sent a caution alert to my subscribers. Caution just means prepare to exit, prepare to cut your losses. Notice what happened afterwards. The next day, it basically collapsed all the way towards the fresh lows. It closed just above the yellow indicator line. A yellow indicator line, to me, this would be a outright avoid. Couple, a bounce next day. So notice the day afterwards, there's the close below the yellow indicator line. 26th of October 2018 is the beginning of a current bear market for this particular security. Notice that the price bounced, yes, and this is a perfect opportunity, a beautiful place to go ahead and short, to sell it. And if you, for example, had a position open, then this would have been a very smart place to exit. Notice the next day's action continued lower, and this is basically a price target if you were trading options, and continue lower, and we have an enormous collapse afterwards. Now again, fundamental analysts most likely are puzzled by this because you can see the surprises to the upside. 15% beat on earnings, yet the price dropped 15%. So, interesting dynamic between fundamental and technical analysis, and I question fundamental analysis quite often, especially in this particular endeavor of trading. Alright, let's continue to another interesting price action chart, and that's of Verizon. So, fresh high for Verizon. I'm sure the fundamental analysts expected this, but I didn't, because I don't really read the fundamental analysis. I read the charts, right? Okay, so on this chart of Verizon, we are seeing a breakout on June 27, 2018, and I believe this was an actual alert to my subscribers. So here you had several days to enter on the long side to buy. You had target pretty soon. This up arrow, I believe, was my entry. Yes, this was my actual entry. I opened at $50.75. Basically at the blue line. It kind of touched the blue line, came down towards the line from above. I opened the position. My target wasn't terribly ambitious, but it went there really fast. I went ahead and I sold half at that point a few days later, basically. The position continued in my favor. I'm still trailing the position higher. I still have the position open. So we can see a very consistent price action. This is a bullish price action. what I was showing just a few minutes ago, for example, European markets, VGK, this is a bearish price action. But Verizon right now is a bullish price action. So pretty straightforward. Where do we buy? Where do we sell? We sell around the indicator lines. Very simple. Aggressive traders can buy and sell around the green line. You can see very nice bottoming opportunities here constantly, basically. But I'm more conservative and I like to see a pullback towards the blue line. So interest rates pulled back from 5-year highs, and this is TYX here. This is a treasury yield, 30-year treasury yield, which is currently at 3.327%. So we moved the decimal point over. It's in a very good place for a bounce. Like I keep showing those indicator lines, you can see that it seems that it wants to bottom here. Maybe it will bottom here. I have a suspicion though TLT will want to bounce higher. So again, you can see right this instant we're at aggressive short levels. I continue to say that I wouldn't aggressively short, but if you are, you could, and see if that is going to turn out to be the correct decision. Me personally, I would wait to short TLT until we get to 118. So here the bonds are strengthening right now, but they are at such levels that aggressive shorts can come in and just sell them again. Macroeconomically, bounce in bonds is showing more of a flight to safety kind of thing. In fact, many of the defensively oriented sectors like real estate and utilities are, and especially the staples XLP. In fact, let me show you my position. I have still, I just closed it. I got stopped out out of XLP. So I had a trade opened on September 20th with a stop below the yellow line, which was then 50 bucks. You can see that the position went against me, and if I had a tighter stop, I would have been stopped out and I would have a loss on my hand. But no, I just kind of sat through it and I calculated my position appropriately, and then I went ahead and I sold half when I reached my first target, which happened on November 9th, moved my stop to entry, and was promptly stopped out. The trade is still profitable. This is what counts. And this is what I'm basically after. I'm after a consistent profit. Now, what I'm showing here is I'm showing that consumer staples, which are a defensive sector, are gaining in price. So perhaps there is flight to safety of some sort, and it translates to TLT, to bonds, as more price appreciation for bonds. So you can see bonds are gaining here for the past few weeks. But again, they are currently at a good places to go short for aggressive traders. Excuse me. My throat is drying up. Alright, let's try to get through the rest. So bonds right now I just avoid completely. Junk bonds hit fresh lows. Here are the junk bonds, high yield bonds. So these are fresh lows. Notice all of this downward facing arrows. Again, those are the places that I would have shorted if I was trading them. I was not trading them. So correlation between bonds, correlation between junk bonds and stocks is very high. So this behavior in junk bonds is worrisome for stocks. I'm afraid we could continue to roll over. The stock market continue to roll over. Okay, let's continue to Forex. This is DXY, dollar index. So we're pulling back from the highs in a normal kind of orderly fashion. You know, dollar is bullish. There was a breakout back in May, and now we're basically looking for buying opportunities. It translates into fluctuations in the actual underlying currencies versus the index. So here is euro versus US dollar, bouncing towards the yellow line here. New Zealand dollar, for some reason, you can see this bouncing pretty high. I would still short it though. Yeah, we've been trading various forex instruments at MasterChartsTrading.com, so find out more about these lines also at MasterChartsTrading.com. So this dollar action, so far it's not unusual for a bullish security to pull back in such a manner as we're seeing now. I would still not really think about buying it until like we get to about 94.15. But the individual currencies we can look to trade individually. For example, euro. You know, for me, if it bounces to $1.17 and change here, then that would be a really good opportunity. Notice what happened last time. Same thing. We see basically at the indicator lines, we could short at the indicator lines here. So this, you know, temporary perhaps weakness in the dollar is translating into a bit of a strength for gold. You know, we traded gold here as well. You can see that we shorted gold here in October, in late October. And if you held your position through this bounce here, then you would have made nice money already. Same goes for GDX. We shorted GDX as well. So here is GDX. We had 2 alerts out in October of this year to short GDX, and yeah, there's you had a target within a few days, but then even a bigger target materialized. Now we're kind of bouncing, so we'll see if we want to short it again. And again, I would short it around $20 here. So gold bear market currently possibly bouncing. If the dollar goes lower, dollar goes lower, DXY towards 94 levels, then gold has a chance. Yeah, gold needs to break out around 1288 for me to become interested in buying it. Right now, I am more interested in selling it, shorting it. Next is probably the biggest enormous gains here that our subscribers here experienced, and this is of course from natural gas trade. 2 alerts were sent, one on October 8th, another one on October 16th. And you can see the gain was 54%. If you have no futures account, obviously you can do UNG, over-the-counter ETF, or retail ETF rather. Gains here you can see were lower. That is because of the slippage, 48%. Still very nice gains. And of course, if you had purchased UGAS, which I absolutely do not recommend, but for some reason you did, that would be a gain of 198%, right? This happens occasionally. It doesn't happen all the time, obviously, but you know, if it did happen, so congratulations to subscribers. That's the best thing I can say. Unfortunately, me personally, I had no positions, and now, of course, I should have bought some UNG options. I should have bought some calls here. Should have, but never happened. So, congratulations to subscribers. And of course, you can sign up at MasterChartsTrading.com. Here is USOIL. CL1 exclamation point. So same thing. Oil basically collapsed. Notice where it collapsed. We had kind of like feeble price action. I didn't see how it broke below this blue line, and then it tried to rally on the 24th of October, right there, and it didn't. It didn't close above it, and then just kind of meandered here below the blue line, and then just continued lower. Then the breakdown occurred in November 2nd, rather, 2018. I didn't send the alert out until the next day, but you actually had a couple of more days to get as short as you can, and you had a very nice 12.5% gain. Again, if you trade in futures, this obviously turns out to be a nice gain. On November 5th, if you were trading UWT or rather DWT, November 5th, you would have made, let me see, November 5th, the alert was sent here. And if you were trading it, then you could make about 47%. So it's pretty nice gain. Okay, so oil, gas, let's briefly look at cryptos, which are again at fresh lows, and I guess it's just being sold horrendously. Yeah, so again, I would be short if I was trading it. I would be selling it. I would be shorting it, but I can't get short because aggressive sellers are selling. I like to get conservatively short, like around 71,000 right now, 7,100 right now. But this obviously didn't happen. So Ethereum, the same thing, fresh lows. Litecoin, yep, next again fresh lows. Here the XRP USD was just really wild action, and here we can see this is where I would have probably gotten short. You can see that price came up to, I'm gonna zoom in right there on November 6th. You can see the touch of the price at the red indicator line, and the next day it closed below it. So actually the same day it closed below it. So I would have probably shorted it right there, like right there, at 54 cents, I'm guessing, or so. And basically that would have been good for about 20% gain, because notice the next few weeks, a few days later, you can see a drop here on November 14th, and this is more than your target. This is 20% gain. So I thought maybe we're gonna break out. No, it's no breakout. So anyways, head over to MasterChartsTrading.com, click on alerts and indicators. I have simplified the checkout dramatically. You can now subscribe to indicators, subscribe to alerts, or better yet, subscribe to both, because you can trade and listen to my voice as well. And that's a bargain, especially if you get a yearly subscription. Again, if you have any questions, send them in, like the video, and share this video with others. Thank you for watching, and have another great trading week. Bye-bye.